interesting thoughts about, you still think guidance for 22 is aggressive, and you still believe that a lot of demand was, in fact, pulled forward by COVID.
Yeah, no, that's still our view. So the company got to about 1 million to about 1.1 million net adds in terms of subscriber growth for fiscal 22, which ends June. If you looked at pre-COVID, the company was more on the track of kind of 500,000 per year. They were kind of north of 1 million last year. But we think in this environment where people are looking to get out of their homes more, obviously the economy's reopened a lot of demand was pulled forward, as we mentioned in our note. And so we think all these are kind of creating some near-term headwinds. We looked at some of the data recently. If you look at some of the Google search trends data for December quarter, still shows consumers are searching for Peloton about 30% than they did last year during the December quarter. We think clearly that shows demand was pulled forward, less interest right now in kind of at-home fitness. We still like the long-term trends of at-home fitness, but near-term, we think a lot of that demand was pulled forward. And we're still a little bit skeptical that they can hit 1 million subscriber growth for the fiscal 22.
Yeah. What do you think? How do you characterize demand headwinds relative to some of the supply headwinds that they actually dealt with really earlier in the year?
Yeah, so supply headwinds were an issue before. We think a lot of those have been alleviated now, especially as the demand has slowed. So before you're kind of in a perfect storm of you had a high demand and low supply. Now we're seeing a little bit of the opposite. Supplies come back online, but demand has fallen here. So if anything, the company recently said they're going to be kind of looking to cut some costs, hiring freezes. So we think we're at the opposite end of that spectrum right now, where demand's starting to slow a bit, but the supply and the positive supply side, supply issues have become less of a headwind, we would say, near term.
Aaron, we think of Peloton as kind of this quintessential stay-at-home stock, but pre-pandemic, they had actual classes that people could pay a lot of money. I've taken them, and they are not cheap for an hour-long class. And you take a class in person with your favorite instructor. That, of course, that spigot has been completely turned off for the last 2 years as they've just had the instructors in a room by themselves. Do you think that's a potential revenue driver in 2022 as we think about new ways that they can cater to a more open economy?
Yeah, no, I think it's a good question longer term. So before kind of pre-COVID, they did have their New York studio, and now they have a couple of other studios. But to your point, those are not for kind of people off the street to come in. We do think that's an interesting question, though. We've done a couple of surveys that have shown, even with at-home fitness now, people really wanted to get back to the gyms. So obviously the company's view is that everyone would kind of stay to doing at-home fitness, even post-COVID. But that's not really what's happened. People have returned to the gym. They want to get out of their houses more. Interesting question is, will Peloton look to do some type of offline strategy longer term? They haven't really mentioned that, but we would look for that as a possible growth area longer term. To maybe you get the benefit, as we've seen with maybe with Equinox, you have a gym membership, plus you can also have the digital membership on top of that. So that's an interesting idea longer term that they may look to explore to really cement their brand.
Aaron, what about a more diversified pipeline? You know, we've gone from bikes to treadmills. What do you know of, if anything, that could be in the pipeline in the future? Does Peloton need something? And also the idea of the company potentially being acquired, maybe by a fitness-related company, a gym company, for example.
Yeah, so we'll expect other products. I think the research has shown by far treadmills and bikes are kind of your two leading categories. So we think everything else is much smaller than those two large categories. But we do think there are other areas. Company clearly has intentions of a rower. We've seen kind of designs for that. We've seen some strength products that they've talked about that they're going to be launching one of those shortly, which is kind of called the Guide, Peloton Guide, which helps you with your form. We could see maybe like a tonal type of product from Peloton, which you've seen a lot of advertising for that product recently. But to your point, we do think whether Peloton gets acquired or Peloton is the acquirer, we do think it's likely we'll see some consolidation within the at-home fitness space. With some of the slowing growth that we're seeing, that would make a lot of sense to get more scale efficiencies, whether it's cost efficiencies or revenue synergies across the board. So we do think we would expect more consolidation in this space over the next year or two.
Shepard Smith here. Thanks for watching CNBC on YouTube.